What's up, Danny? So I heard you had an amazing trade.
What's up, guys? Yeah, it's been an interesting day. Um, are we waiting on Colby or Tommy?
Potentially, I guess they'll drop in if they can make it. I hope they can make it. Last
Yeah.
time Colby was at the beach, but I think Tom should be making it. I don't know. We'll see. But feel free to share your trade.
Um, yeah, let's take a look. So I'm up 5,200 on ICCT,
Dude, there we go.
um, which is great to see because August has been
I
just
know.
so terrible.
I know.
Yeah,
It's funny
it's
'cause,
been my
like
worst month in three
I
years.
can feel it too, and it's interesting. Well,
Yeah.
I just made finished the strategy and to take advantage of it. But yeah, August was like literally my equity chart is flat, and then today it had a pulse for some
uh,
reason.
yeah.
Flat
Well,
chart
flat is
again.
flat is not bad. A lot of people are having a
Not
really tough
bad.
month.
I
Yeah.
totally agree.
And I'm trying to keep that in mind, but today definitely helps.
It's only worth it if you work for it. It's only worth it if you work for it. I won't stop till they hear me now. I won't stop till I wear the crown.
Um, so I'm up 52.67 on ICCT, which is awesome.
That's huge.
I
Congrats.
forget what I
Nice.
forget what day it was, but I think I had like just taken a loss or something. I was posting in the Warrior chat and someone was like, "Is it time to size down?" And I was like, "No, definitely not. I just need to be more selective about what I'm trading because like I'm taking bigger losses than I have before, but like I'm making 5 grand on this.
Yeah.
Um, I had a couple good examples. There was JTAI that popped up the other week that I think it was last Monday, right here, popped up, halted up, long halt. It was halted for 31 minutes, resumed up here 640 from 480, 470. Huge gap, dipped down, popped up a little bit. I took almost 3,000 shares here at 690, held full position into this halt because I was already
Oh my
down 3 grand
God.
on the day.
How did you
Um,
know? How did you know that was a like? How did you know to trade that? Was it because of the halt, the first halt?
yeah, because I mean it was honestly because of the Warrior scanners and the chat room.
Oh,
I
okay.
have a halt scanner that just shows me things that are halted, but other people were calling it out that it had halted and it was showing a big gap up. So um I just took a look at it. And whenever something makes a big gap up like this, like two things are going to happen. One
Yeah.
of two things are going to happen. It's either going to have no strength and just give it all back and halt down because people are taking profit, and that profit taking might cause panic selling into a halt down, and then it's just dead unless it resumes flat from that and then kind of consolidates and moves higher. Or that won't happen and you have another big squeeze up because you have people who see that big gap up and you see a little profit taking, and shorts try to get in it because it's a big gap up, and then they get absolutely blown out. Um, so it held. I took almost 3,000 shares. I held the whole position into this halt. So I was showing like 500 profit from 690 to the halt level here at 708 into that halt. And at one point, it was showing like an 880 resumption and 5,000 unrealized for me on that if it had opened there. But
Wow.
um,
That would have been
it
nice.
opened up here. I managed to get about 3,300 out of that. So the reason I'm going over this is somebody the other day had asked about like, is it time to size down? And I was like, definitely not. I just need to be more selective about what I'm trading because on the right stuff, when I'm sized up, that's instant 3 grand.
Yeah.
Like
Um,
I think also it goes back to the idea that you are your equity chart, right? Like sometimes
yeah,
the market does control a little bit of it, but you need to be aware of like when you know your strengths are in play and sizing up. Because if you constantly just size with the market, like
yeah,
especially I'm talking about like as a discretional trader, because I
yeah,
think you guys individually as the equity chart. I don't think of the trades that you're taking because you are making the decision for all of that. So
yeah.
like yeah, you definitely need to be more aware about it. And I can, like I said, I always know when people are scared. I completely understand that. Sizing up
Yeah.
is a whole thing in itself.
Yeah, absolutely. So what was I gonna say?
Sorry to cut you off.
I'm not just like taking bigger size because I feel like it. Um, I'm doing it hopefully on the right trades. And then especially when I get confirmation that I'm on the right stock or the right trades, I'm like, yeah, time to take more size. So my biggest challenge every day is just being careful about the stocks that I'm sizing on. Um, Before I get into ICCT, I'll go into HKIT because I'm down 1,300 on it, and I was down 2,300 on it. But it had this pretty much nonsensical multiple halts down this morning, and it was in this halt down where I was asking, like, is there any reason anyone sees that it would be halting down multiple times in a row with no stop from 24 down to 16? And everyone's like, no. So I was watching for this potential move to happen because whenever you see something, and especially because HKIT did exactly this the other week before it had a massive squeeze. Right here. Same exact thing happened. No reason for the halts down, massive squeeze back up. So that's exactly what I was watching for. And I missed this. I just wasn't watching the resumption. It opened up. So it opened 1650, dipped, halted 1813, opened at just under 21.
Wow. Crazy.
Yeah, I missed this too. But
I don't know if I even back in the day I would never have traded this because like I don't know if I'll take the risk. Like
I
don't know
love this stuff. I love this because it's just pretty much psychology at this point.
Yeah.
I mean,
there's
yeah,
no
but
volume
also,
though. Oh my God. That's a ballsy trade, I gotta say.
yeah, even with
Well,
because I don't know. I mean, back in the because I remember Ross even took a bunch of these trades. Like he did well on them. But I remember one trade where he broke his rule and he just kept adding and adding as it went down.
That's yeah, you really have to be careful. You have to be really careful and disciplined on stuff like this because it can go the wrong way really badly, really fast. Because it's a $23 stock. What if I had gotten caught in this halt down and I can't sell my even just 1,000 shares until I'm down at 16,
Right.
Well,
So you have to be really
yeah.
careful about this part of it.
Mhm.
What were you saying?
No, I was gonna say that like the good thing about halts is I'm thinking of at some point doing like some tests on this is that the potential for profit can always outweigh the potential losses, especially if you're doing on these small caps because because of the percentage gains, the idea of how percentages work.
Totally agree. That's
So
why I took the trade.
yeah, $2 to $5 would be 100%. And if it gaps up that high, that's if it drops, it's only like 20%. If you constantly take these halt trades and you're very accurate, you might actually always be in profit. I don't know. I need to see what that looks like, but
I wish that there was a better way to tag my trades. I just take
I know
too many trades.
when I used to trade, I didn't know how to tag. I was like, this is just too because
I could
still
tag
nuance sometimes.
Yeah, I could tag my trades. It's just difficult. Like even today, I have a low number of trades, which is like 30 or 40 or 50 or so. But even then, it's like it's hard to go back and tag them.
I've
but
had the same thing. Even like 15, 20 trades will take you an hour to properly tag.
Yeah, exactly. So,
At least.
I can't give you statistics on it, but trading halts is one of my best strategies easily.
Yeah, it was mine too. I'm pretty sure I was very, very profitable when I was trading halts. It was like every time I saw a halt, because I had a halt scanner too, and I always looked at that more than anything.
Wait, Lawrence, can you explain the
reading
reason
the price
behind
action?
The halts
behind the what?
2 to 2, or what did you mention there? Between them being profitable setups.
Oh, so when you go from $2 to $4, right? That's 100% increase. So like I've seen stuff halt from 2 to 7, right? So if you take that trade, percentage gain is always going to be more than if it drops from 2 to 2 to 1. So what
Right.
I'm saying,
Okay.
the structure of the stock market is that long, or even markets in general, especially small caps, is that the price, the potential of gain, especially with these squeezes, is always going to be more than the loss at these prices, at these price levels. So
Yeah.
that's another thing you have to keep in mind. If for anyone who trades like large cap and small caps or either as an algo, when you get into these lower price stocks, you have to flip your whole mentality a little bit on how to trade them, because the price structure doesn't even move like large caps. It's a completely new
Yeah.
thing in general. Yeah.
Yeah, I really like the way you phrase things because it's everything that I know but have never really verbalized before. So, but so anyways, what you said is exactly why I took this trade. There's so much more upside potential, especially because you have this bottoming out that halted up hard, gapped up hard straight into the next halt. So there's a lot of shorts trapped here. And so I was looking for it to get back to this basically 0% on the day, which, could be a good red to green move that would squeeze higher. So it opened here. I took shares. I got a fill at 24.72. I just took 1,000 shares, which is not a huge position for me at all. With something this much range, that's a pretty normal starter. It did pop up over 25, but I wasn't able to get any shares out, and I had to sell down at basically the bottom here. So I took a $2,300 loss on those 1,000 shares. But just like we were saying, it was the right idea to take that trade because a few minutes later it squeezes up. And at least on this, I took a smaller position. I took 700, but I was able to go from down 2,300 on it to down just under 13. So I made a good chunk back at least. But that's the first example. That was my first major trade of the day.
I'll say another thing about this
And then
is another thing about that even is that Alex, we were saying that we wouldn't take that 15, like that trade from 15 to 20. But one of those, that's a good example of it went up to 25. Like if you held that, that's that's like 75% gain. The lowest it could have dropped at that point is probably maybe at worst $8, and that's I don't even know if that would have been possible. So it's an idea of I think I start to see a little bit of why these high big risk takers trade these halted stocks.
Huge potential.
Definitely makes sense.
So this was ICCT. I initially was not interested in it because it was showing everywhere like 150 million float. But that's incorrect. It had a 33 ratio reverse split. So it's actually only about a 5 million float, which is right in what I like to trade. It halted up pretty much out of the open. I missed that. And then it was kind of choppy. But what it did that I was really interested in is it never broke down, and it double topped here at 320, rejected off of that, cooled down, came back down to VWAP under the EMAs. So it's looking not great on the day down here, but you're going to have some shorts in here that if it starts creeping back up over 3, especially, they might be underwater. And so you had a pretty nice ascending support trend line here. And I was calling this out. It looks like a wedge for one, just a pretty normal wedge, but it's also an ascending triangle, which is one of my favorite patterns. Ascending triangle, descending triangle, typically they'll break the flat side. And that's exactly what happened here when it basically said it's not breaking down. As soon as it started creeping back up here, I got in this candle, pretty big size. I don't remember. Actually, not really that big. I think it was like 2,500, 3,000 maybe, but that was a 40-cent candle. So I went from down 1,000 on the day after where I was on HKIT, straight up to down 200 on the day.
Wow, it's nice.
And then
the upside potential is crazy.
What was that?
I said the upside potential for these types of crazy, because even you take such little risk on that. And this goes back to that idea of the simulation that I sent you guys, which we could talk about later.
Yeah,
It's
get into that
figuring
too,
out
for sure.
figuring out where upside potential lies and where the crux of risk
Yeah.
versus reward. Because the problem I found now that I'm noticing is that why are there so disparate? Why are there such disparate um high earning traders and then traders who've been trading very consistently but still only make a little bit?
Yeah.
Very consistent. And it's just what I'm looking at is just risk. It's like both of them were
Mhm.
just so fine with taking different qualities of risk that but the other
Yeah.
person who's taking less risk and more consistent doesn't even know that they could be taking the other person's risk even by just a little bit and potentially doing as well.
It's it's yeah, and I think we should definitely talk about your equity percentages, how you mapped that out too, because that's
Yeah.
really interesting and it goes along perfectly with um, one of the things that I understood probably for the first time in my career earlier this year was like exponential bet sizing, which Lance Brightstein talks about a lot. And so I've really tried working on that this year. And so like this is the first A plus setup I've seen in a long time.
It is
It
it's
matches
good
everything
so
that
far.
I'd look
Yeah.
for, including price action. It's failing to break down. It was soaking here, getting bought up. So you squeeze. What I really liked at this point was that it squeezed. It didn't break through. It actually did break and reject 350 at first, but it still didn't even ever touch the 90 MA until this candle where it launched 50 cents higher. And I
Yeah.
was in this with bigger size. So I went from up 300 on it to up 1,000 on it in this. And then I went to up 2,000 on it in this candle. And then again, it did the same thing. It was pretty extended at this point. That was on the 5 minute, that was back here. So it
Did
was
you
holding at
market
about
order into those?
4. What was that?
You market order into those?
Yeah, mostly because I'm on TD, which is commission free. So I don't have like if I punched it for, and even using DOS, if I punched it for by the ask plus 2 cents, I'm gonna be pissed if that skips my order.
Mm.
So I would rather just get my order
Uh,
filled. But most of the time I was buying when it would dip like this because I was also recognizing, and at this point, the spread still was opening up to like 10 or 12 cents, which on a
yeah.
$4 stock is not that small. So I was usually buying when it would dip, and that would get me a really nice entry to hang on to. Um, and
Mm.
then, so it made that nice move. It was super extended on the 5 minutes here because 90 MA on 5 minute was down at like 340, 60 cents lower.
Mhm.
So at this point, I was like, made a nice gain on that. I'm solidly green on the day. Going to give it a second, let it consolidate, see what it wants to do from there. It popped right back up a few minutes later. Um, I think that I got this candle. Actually, what I can do is I love my DOS charts
Yeah, the DOS charts, but
because
they show the entries so much better in
they
there.
yeah, it's so nice. So we can just look at exactly what I traded.
That looks like yeah,
Um,
like Ami broker. Like I coded
yep.
coded it out.
So I took that break really pretty much on a good entry there, kind of against the descending resistance
Mm.
line going across there. Almost always, I'm just taking profit into these breaks. If it holds up, I can add like here, but then I'll take profit on the break. And then it held here too. So I took profit or I added, took profit, bought the dip, took profit.
I just want to say
Um,
this looks like a high frequency. If you've looked at a high frequency order coming going in, this is literally what it looks like. Buy the dip, sell the top, buy the dip, sell the
yeah,
top, buy the dip, sell the top as it's
yeah.
going. It's funny.
Well, but also one thing you'll notice is I don't really take a starter. Like I'm gonna just take my position so that I can
Yeah,
scale out effectively on the
yeah,
Yeah.
yeah,
top.
yeah. That's what I'm saying. You're more like there are different ways you can always structure your strategy, and we can go into that because I've actually been we're working on a high frequency we're working on a high frequency thing right now. Well, I'm working.
Yeah.
I always say we, but like it's always just me. But
Yeah.
but we're I'm thinking of doing stuff like this, and the problem is you get to see the tick data, you get to see the order book. Paying for order book data and tick data is expensive.
Yeah.
Yeah, it
It's
is.
I don't even
Data
know
is
how
super expensive.
I don't even know how historically I can get this data, but it's interesting to see you do it because it's like, okay, so this is what I need to just copy. and figure out. I think at some point I have to do like an interview with someone who does this so that I can like think about what.
ICCT just got halted for news pending. T12.
Uh-oh.
Oh,
Yeah, I'm still in my
Let's.
EDTX hold for almost 2 months now, or a month
That
and a half.
sucks.
That's
Well, let
yes.
me quickly just recap the rest of it, and then we can move
yeah.
on.
I
So
would love to know what you were doing around like 11.5 and stuff, 11.10.
right here,
Yeah,
yeah.
this
So
this it gets intense.
this is where it started to really go parabolic. Max and I, one of my friends, Max in the Warrior chat, he does awesome. He trades big size, but he was up like 23 grand on this today. This is where it broke this level, and we both said, like, this pink line here is the upper VWAP deviation, and we were like, it's had a nice move so far, but it really hasn't gone parabolic yet. I got this nice entry scaled out. This is where it really started to go.
Mhm.
And this is where I went from 2000 to 3 to 4 to 5 in a
How are
matter
you
of
how are you
minutes.
scaling out on those? Are you
That was
what are
so
you
nice.
like? Is it 25%?
Um, percentage? No, I am holding until I start to feel like it's heavy. I don't pay attention to percentage or how many cents I'm up. I'm just watching the price action
In the
and
price action, which
like,
is how I used to do it too. But I'm trying to
yeah.
figure out how much are you scaling out per.
Oh, of my position.
Yeah,
Yeah, I have hotkeys set up to sell third.
a third, so 20. Okay, so like 30,
Yeah.
40, 35. Okay.
Yeah. So I had that at a quarter originally, but I found that just got me out like really pretty slowly, and sometimes the move had kind of like retraced a little too much by the time I was getting most of my shares out. So um I'm scaling out. Probably this one at this level at a whole dollar was an order to sell just under the ask limit order. And then this stuff, when it's just popping and flying, I'll do a combination of,
Yeah, yeah.
if it's moving hard, I'll sell under the ask. If it's kind of chopping around, I'll just take profit with a market. Um, but like, it moved up here, sold, added for the 550 break, sold through it, got back over 550, held, sold through it. And then one of my major issues that I've been having, um, mostly earlier in August, was catching a move and then giving a lot of profit back. So what I'm really happy about on this one is had a really nice trade here. That was like another 1,000, and then I was holding like just 100 or 200 shares at this point because I was waiting. Like, we still hadn't had a rejection yet, and so we finally get a real rejection, and I sold the rest, bought the dip just a little bit, sold small pop, and stopped trading it
Yeah.
until
Oh, you kept it.
until it started holding this trend line, because it bottoms here, pops up, didn't trade that, bottoms here. So now we have a trend to work with. And I took a few trades off that trend line, took a couple trades through this, and now we're T12 halted.
Wow. Yeah, it's
250% on the day. So we'll see what the news is.
my God. This is why you stop trading these. Yeah, that's crazy. I mean,
Actually, it's a T1 halt. So it's not news pending. It is the exchange requested the company to respond to the price action on the stock, basically. So anyways, that's my recap on ICCT. Really nice to hit a really solid win finally.
Yeah, I
But again,
believe
it
it.
just goes along with like everything I've been working on, which is sizing up on the right stuff and just trying to be okay with it when I take some bigger losses than maybe I'm used to. But then, on the right move, this happens too.
It's really a different going into a different league. It's really nice. It's like when you're doing those like, $50 to $200 days, and then you have your first $5 or $1,000 day, and then like that
Yeah.
becomes the new norm. That's nice to see those numbers. I'm happy for you.
It sure is. I mean, last year was a nightmare for me. I had trouble every day getting past like 100, 200 on the day.
Mhm.
And it was mostly just due to issues with sizing, being that I was taking mostly the same size on everything and not necessarily the best setups. Um, and it was just a choppy market that I wasn't really reading that well. Um, so nice to be making some refinements to what I've been doing.
Yeah, everything looks really clean on how you're doing. I mean, I don't anticipate myself doing anything that high frequency until well, I pay for tick data. So
Yeah.
we still hold like even the high frequency thing that I'm working on right now. I think the average hold time was like 5 minutes. Maybe, but it exits at like 1 to 2 to 3 minutes too. But doing stuff like that, and don't get me wrong, everything works, right? I think the cool thing about that is just very capital efficient. But I don't know how capital efficient it is if you're going in and out that frequently too. It's like, well, yeah, technically you have capital
Well,
in a second, but it's gone
I know.
3 seconds.
Yeah, like, well, the thing is, like, yeah, it would have been awesome if I had held a bigger position from down here because it was a strong break on a high quality setup
Mhm.
and then taken profit up here when it really found resistance and then done the same thing.
In a
But
perfect world.
in a perfect world and in the right market, like
Yeah,
2020, summer 2020,
Ross
sure.
used to do that. Yeah, he
Yeah,
used to trade, he used to hold a big position and then trade it in as it was going. And
hold a
like,
core and
yeah, and now that I think about it, like that's look, it's a good way to like even though they are correlated, it's a good way to reduce correlation or to play yeah, reduce correlation because each trade inside the bigger trade is individual. And then if they
yeah,
all do at the end of the day, you know, because how many times have you traded something going up and still lost money? Imagine
oh
imagine
yeah.
if you held it in the bottom there and then
Not
keep money on
that
that.
often anymore, luckily, but yeah, sure. Every now and then I'm red on something that went up hard and that sucks. But yeah, when you do that, when you're able to do that, it's two different things going on. You're holding basically an intraday swing while you're day trading it.
Yeah.
Um, but like the thing is, when's the last time we saw something this high quality? So you have to be realistic and responsible at the same time and be taking profit because this is not the norm right now.
Yeah.
Um, if we start to see more of this happen, I'd be more confident to hold. But I was looking at my stats for specifically for August, my typical average hold time and average both winning and losing trades is about 30 seconds. So it's interesting when you hover over this, it shows you the exact time. So average hold time on my wins on this one today specifically were 1 minute and 16 seconds. And average losers today were 13 seconds. So with something that was showing me that it was having really good upward potential, I was holding it 5 times longer than my losses.
I'm starting to see what I'm missing. It really is the tick data because you can see
Yeah,
in those 15 seconds why this thing might
yeah,
not work.
yeah,
Whereas
exactly.
I can't really see that, and I don't have the order book to even place any idea. And that's, I mean,
Yeah.
obviously, all like Citadel is in the order books, like they do all of that. The thing is, I don't know how to simulate that, but it's good to know. I mean, it's not like I'm trying to be a high frequency firm, but
No,
I've been
but like you want to emulate what they're doing. It's just
yeah.
with everything. Like you want to emulate what the top is doing.
And you
Mhm.
for me, it's also I wanna be um as flexible as possible in all my strategies because every strategy makes money differently. Like this strategy can
Yeah.
make a lot of money. It might have a liquidity issues down the road, but it can make a lot of money very consistently.
Mhm.
Whereas some of the strategies that if you have a swing trade strategy, you can have $10 million positions, um, and be able to still close them with slippage that wouldn't kill your each trade. So
Yeah.
it's really just flexibility that I'm thinking on, and I really want to do more high frequency stuff because I see the more consistency. Um,
Right.
on a consistent basis. Yeah.
I'm trying to upload the rest of my trades because I know I took some more trades on it after this upload. But the last thing I wanted to touch on is 73% accuracy trading this stock. And I know that that's how well I can do when something's moving right. And that is what I should be waiting to trade.
I don't know about waiting to trade. I think taking more, because your win rate is always going to change. So like someone said this in the podcast, your win rate is also a chart. It goes from 0 to 90, and it can really regulate over a period. Like you could have 5 trades that are 90, 5 trades that are 30. And I think the idea is that you need to keep it around that general average range. But yeah, you find days like this where you find something that is a 70, and that is when you should size up, which you did, and that's when you perform better. So that's how you really need to think about it. I feel like I'm giving out all the ways to make an algo. If anyone who's watching this is making an algo, listen and try to learn from this, because I mean that's how you should really think about it. Even on a discretionary end, like when you look at your data, I think that's how you should think. Like, hey, this is what my data is actually telling me. I shouldn't just think this is special because it's
Yeah, my better days are also over 70%, and then my bad days are like 30 or something. My average is around 67. Actually, there's a really good question we had last podcast. And this is exactly similar. Let me share my screen quickly. So everyone could give their feedback here. I already gave a little bit of an answer, but this person, Guns Emperor, I'm not even sure, legit hit. There we go. They were wondering, why is there a lot of profitable traders here on YouTube that use 1-to-1 risk reward, despite the typical saying that you should at least have 1-to-2, 1-to-3 risk reward? I'm now having a dilemma whether to stick to my 1-to-3 or switch to 1-to-1, knowing my win rate would increase, and also I'll be more profitable daily on the latter. No, this is something we talk about all the time. I already kind of hinted at this a little bit in the answer. I said a higher risk reward is often the goal, and it's better to start to improve your win rate. It's a better stat to improve than your win rate. Danny, for example, has the best risk reward, and he's also the most profitable in the pod. And I have a lower risk reward. I'm more close to like 1-to-1, but I have a much higher win rate than Danny. I think I'm on average a little bit higher, because you said you were getting close to like sometimes even 50% on a lot of days, but
I'll even be below 50 on some days.
Yeah, that's what you were telling me. So I was basically just saying getting profitable first, any means possible, is probably step number 1. And then improving from there, step number 2, which typically means improve your risk reward over improving your win rate, because a win rate really doesn't mean anything. Like, if everyone's green for a second on a trade, often, what are you going to do? Are you just going to quickly close it to improve your win rate? That doesn't really make much sense. You want to hold your winners longer and cut your losers quicker. So you want to focus on the R to R.
Well, I can talk on this because I have strategies that do everything, right? I have strategies that have an 80% win rate, and I have strategies that have a 50% win rate. So it's very interesting, and this is why I always still go with the everything works. So I've been looking into this thing called grid trading. I don't know if you guys have heard of it, right? I think, Alex, we talked about the whole Martingale style trading, where you double the risk, but that's not what I'm talking about. This is a more systematic way. By the way, grid trading has been around since the stock market has been around. It's just something
Are you saying grid trading?
Yeah, grid trading. You can look it up and maybe pull up an image of like what a chart would look like. But essentially, the idea is that you have different grids, different points of the chart, where you keep adding positions until the chart reverts back, and then you take your profit, and when it reverts back to like either an average. Actually, there's a lot of ways to do grid trading. I'm not gonna get into it because there's so many different ways you can do the idea. But the idea is that you're adding or putting trades on multiple grids to end up with a profit when price reverts back at some point. Right.
That's different than the Martingale strategy.
It's different because you're not doubling your risk. So sometimes you're increasing risk. It depends. You can play with it, right? There's a guy on YouTube. You can look him up. His name is I think it's let me look up. Give me 1 second. I guess I have him here. Um, his name is Ryan Brown. Ryan Brown, he does grid trading on YouTube. He's doing it for the last, he's been 8 years, he's been trading for 8 years. I think his last 3 years, 4 years, he's been profitable, and he has multiple grid trading strategies. Um, you can pull it up if you want to see, kind of what that looks like. So it kind of looks like this. He's not actually buying 2 lots, 4 lots. His strategies are a little bit more intricate. But the reason why I bring this up is that this has a 90 something percent win rate. Actually, if you look at the equity chart, it's just a straight line.
It's like
He has literally just a
exponential
straight
sizing
line.
on the way
Yeah.
down.
Well, it's not necessarily exponential because some trades he just goes with like win. It depends. You can structure it, right? Remember, you can play with how you want to do it. Sometimes he does the same like size one lot, and then 2 lot here. Like he'll double it after three trades, whatever. But the idea is that this is what it can look like, right? This is Martingale, but it also can look like this, the grid trading. But the idea for that is that you're taking very small profits, right? But you're keeping a high win rate. And that is just the structure of everything. No matter how you do it, whether you do it grid trading, whether you do it long, you do it in a different way, like I do, where you're getting 80% win rate because you're just trying to take small profits at a time. It's I don't. You just said, is it better to improve? It's better to improve your RR versus your win rate. I don't know if that's true because either one will give you a new structure, a new chart structure, right? The 100% win rate, 95% win rate gives you a straight line. It gives you closer to what Danny has, right? Versus if you're doing a 1 to 3 risk, you're going to have a very either maybe depending on where your stop is, you can have a wobbly chart or I mean, depends on what you're trading. If you're trading, and it also depends on the instrument you're trading. So if you're trading something that trends really well, then yeah, that 1 to 3 might work. If you're on a time frame that is very noisy, like the 1 minute time frame, and you're trading just mean reversion, then actually a grid trading might work because you're just going back and forth, back and forth, back and forth. And then, over a certain period of time, you might have a huge drawdown. Like he had a 15% drawdown, 17% drawdown, but it takes him like 2-3 months to recover that, and which is a lot. But you have to understand he's making money every single day, and he has an account where he does grid trading, like $1,000 account where he does grid trading, and it's just a straight line up, and he's doing that just to essentially make as much profit off of that account, and then he'll take out the profits and just let the account run with however much money left. Essentially, at that point, he's just having a simulator play with money and just create as much money as he wants. So I think and there's also another guy on YouTube who did like a Martingale thing where he did 1,000 bots that did Martingale strategy, and a couple of them finished and didn't blow up, and they made 21 million over a certain amount of trades. So if you really think about it, right, the idea is that risk, we induce a sense of risk that we can't lose everything. Like we want to keep everything as much as possible. So we do that 1 to 3 strategy or something that doesn't have a high win rate because there's a huge chance of it just losing everything, because the structure of high win rate strategies is that they lose. Like for example, Madaz, he has a 90% win rate. It's funny because if you actually watch him trade, he actually puts lines just like a grid trading. I've watched him trade. It's damn near grid trading, but in a discretional sense. And it actually makes sense because if you look at his equity chart, it looks like a grid trading equity chart. So the idea of the answer to that question is that it doesn't matter. It matters on what structure of a chart that you want. If you want something that's a little bit more fluid, yeah, maybe get a 1 to 2 to 3, because those big wins are going to offset your time when you're flat. And then, because I can show you my our new breakdown strategy, which is a trend trading strategy. It literally is flat, bump, because it's just waiting for trends, because every other movement doesn't really give it enough money for it to make a movement on the chart. So yeah, I guess that's the answer. It's really depends on what you feel comfortable with. The best way to do that is to have a portfolio of all of those. You want to, and I'll be honest, we like to say, like, for example, we like to say like Danny has his own strategy of trading. But really, Danny is incorporating multiple strategies while he's trading, right? He's buying the dips of stuff that has just gone up 100%. He's also buying breakouts if it's going up. Like he's incorporating different ideas to create a smoother equity curve. And that's why it's very hard for me to when you say it's very hard to tag your stuff, is because you are essentially more I you're essentially creating and just regurgitating different ideas that you've had in real time. So you don't even know what quote unquote strategy is, but you know when you buy that breakout, you know what you're doing because you know what this type of situation is going to involve. Versus when you buy that dip on a stock that just went up 100%, you know what that looks like, especially if you're just like milking the range, stuff
Right.
like that. So yeah, it's a different way to think about it. I don't think it's always as linear as saying one way would work better than the other. Because, like I said, that guy who's been doing grid trading, he makes money almost every single month. Actually, every single day. He doesn't lose. He like has a 90% win rate. And you can see his equity charts. It's pretty good. And he's never had a blown up account for the
Yeah,
last 3 years.
everyone's gonna have to find it for themselves. To me, it was more important at first getting a higher win rate, so because that was building confidence. But I think right now, if I want to take my equity curve to the next level, I need to actually focus on my risk reward as opposed to
Yeah.
my win rate. But that's also every trading style is going to be different. I think these volatile small caps on the 1 minute, you can put yourself in some really big holes. I think if you're doing grid trading, like averaging down into a loser consistently is, I think, a recipe for
Well,
disaster.
it's not consistently. So that's what I'm saying. The accounts are actually limited based off like he has a stop loss based off percentage of the accounts. So he's not just creating a straight line. Like he does have losses on the account. Let me explain. So it's essentially the same thing as my equity charts that I showed you guys. All those drawdowns, like when you see that one drawdown, he just has one of those. He doesn't have like multiple drawdowns. He just has one or two. But they account to like I think he says he puts a limit of 15% on each account. So like if he loses that much, you will stop it and start a new trading sequence.
Right.
So it's never there's no like I have this issue with people whenever they think, oh, you can lose all your money. Because it's like, let's be honest with ourselves.
Yeah.
When are you ever going to put yourself in a situation to lose all the money? Even you know that at that point on your account, you stop something from happening. It's creating risk parameters that make sense for you. Because I don't think, and like I said, grid trading is not something you can do discretionarily really well. I think it's better to automate it. Because I think emotions can get into play, especially if you're like, I really want this to work. Let me just
Yeah, I
add
agree with that for sure.
another doubled, at the bottom. That's not, I think that's where humans fall. But I think, this guy has one of his strategies. He has 24,000 trades on the EU Forex. Forex pairs, by the way, are very mean reverting. They go up and down. So it works really well for him. And so I think, yes, humans, fluidity works better. Computers, you can do whatever you want. It's not really a thought. So yeah, maybe
No.
the risk reward is better as for humans. But I don't know. Some people I don't know how you feel about like for example, if you have to wait every time for a 2 to 1 on a large cap, I don't know. I don't know if I could wait for that and still stomach like staying in the trade. Because
Yeah.
I know Alex, you were doing that for a little bit, right?
Yeah, I know when I hold too long on if it's a large cap or a small caps, they it tends to go south really quickly. I mean, when I first started trading small caps, I'd be up so many times like 5% and then I'd close for a loss. And you do that, a couple times in a row and you're about to throw your laptop out the window. So I feel like with small caps specifically, doing exactly what Danny was doing, taking those base hits,
Yeah.
it pops up, take that 3% off the table, rebuy, and you're just constantly doing that because otherwise, in hindsight, it's so easy to look at ICCT and be like, yeah, I should have just held. I would have been up, 30% in one trade or 100% in one trade if I just, 30 minutes held it. But like, there's another 20 stocks that you're just going to
I
bleed
will
to death
go.
on. So
And that's the problem
it's a no go.
that's the problem with every strategy. You have to structure it to just make sense for like your risk reward ratio. Like
For
I
most of
don't
the time, yeah.
you can't even do some of these strategies like the grid trading. You can't really do it in a trending market because it might never revert and you might just keep having huge drawdowns. That's why you have to do all your
Good
back
point.
tests and just make sure you have your, because like for example, I have strategies that I test on one market, it doesn't even do the same thing at all in the other market. I have to know, okay, well, this market is just not for it.
Yeah.
Um, trying to create something that works on everything is damn near impossible. Um,
Yeah.
it's especially if you're going to like small cap and then large cap. I mean, you might as well just try to speak Chinese and Malay and French at the same time. Like you're not
Yeah.
trying to talk to the same thing. It's not gonna work.
Toby, do you have any thoughts on risk reward or win rate in terms of where you are at in your trading career and what works better?
I I don't focus too much on the reward part. I really focus on the risk. I think that I probably trade more similar to like Danny, where if it's going against you, my stop loss is pretty much as tight as I can make it.
Yeah.
And if it's going, I'll let it run as long as I can. And so I'm trying. If it goes against me even a penny, I'll get out because I know I can get
Yeah.
right back in. I'm on TOS, so I'm going to make
Yeah.
that 200 trades in a day. It's no problem. And
So
that's kind of part of my strategy is I'm going to get in and out as many times as I want. Maybe I stab too many times, and that's where I get on a slippery slope of over trading a little bit during a day. But I'm going to get in and out as many times as I want to try to position myself to the place I want to be in to take that trade. And if it goes against me 2 or 3 cents, that's no problem. I'm out of the trade. And then I'm going to hop right back in if it drops another 6 cents and try to hold that position if that's where I want to be, or I think that's where I should be for the reward side of that trade.
So Toby, how do you deal with like slippage in that? Because if you're constantly, I'm just asking this because it's one of the things that we have. Like if you're constantly exiting trades, right, at the lows, if they or not lows, but like wherever you think you should stop, because it's coming back at you, and you have to sell at the bid. Does that like eat into your trades if you do that a lot? Because I think you took like one time like over 100 and something trades a day, and I was just thinking, oh, did slippage kill him on that or?
Well, I can take 300 trades in a day.
Yeah, I've seen a lot.
That's not even uncommon. So yeah, I mean, if I took 150 trades, that's kind of a low trading day for me, actually. um, but I don't know. I don't know about other brokers, but with TOS, for the size that I trade, I don't find a big problem with slippage. And like I try not to trade like HKIT or whatever Danny was trading, where it was pretty low volume. I was probably pretty spready too. So I don't trade those kind of stocks too often. So I don't get caught with, if I have 1,500 shares, I don't get caught with slippage trying to get rid of my position. I'm usually able to get rid of it within 1 or 2 cents of where I'm trying to get rid of it.
I'm curious to see because I'm dealing with like I have to account for slippage at all completely because I don't know what the order book looks like. I'm curious to see like throughout all your trades, right? Would you have done better if because you're taking so many trades, the transaction that you buy the ask and sell at the bid, buy the ask, sell at the bid. Does that into your profits? Is that like $10 here, $10 here, $10 here, $10 here? Because that's why I found because I think we changed the slippage from like 1 cent, and like 1 cent on this is market order and so buy and sell, so it's like two slippages. So it went from being profitable 7 grand without slippage to being negative $8,000 when you just add 1 cent slippage on a $20 stock. This was an Apple back in 2015. So it was just curious. It's just so it's and I mean this is something that you see in a lot of algo people. You add that 1 or 2 cents of slippage, and it can completely into your profit over a period of time, especially if you're taking a lot of trades.
It's kind of one of those weird characteristics of having a free broker. Like I'll sometimes enter a trade and get a way better position than I should have had. Like
that happens too.
4 or 5 cents, or I'm like it never.
No, don't get me wrong. It happens to us too. It happens to us live too. But I'm saying in the back test, I have to account for it no matter what. So maybe that is because of the back test, I have to account for it. That in the live, because that's why I say I don't know what the order books look like. I don't know when I'm taking that trade if the ask is here or if it's really close.
Okay,
So,
yeah.
yeah, I just have to
Yeah,
add like what.
that makes sense. And like if I'm trading something and the ask drops, the bids drop down,
Yeah,
like 15 cents, then I have to, they have to make a hard decision. Do I want to dump all my shares at that point, or do I want to try to hold it and let it climb back up a little bit? But honestly, with TOS, like because they kind of match up orders, you don't run into a
Yeah.
ton of slips. But
yeah,
I mean, that's my case because I don't usually trade more than 3,000 shares at a time.
I'm starting now to run into issues with a little bit of slippage when I send an order for like 3,000 or more shares. It depends on the stock, it depends on the volume. But um, if I'm trying to send an order that big, 3, 4, 5,000 shares, it needs to have the volume to support it. And I'm starting to find it'll fill my order in like 5 or 10 chunks around the price, which is
Ooh,
usually fine. But I am conscious of that depending on the volume on the stocks that I'm trading and how much I can take in one order.
yeah. Like I can account for volume, but like I remember one trade, we had a day where this person exited. I guess someone must have exited right before my trade, and he brought the stock down. He sold like a she sold like a $25,000 share position on ExxonMobil. He brought it down like 15 cents that second in 1 second, and I sold after him. I saw the slippage on our thing. I was like, wait, how does that? How did it get 20 cent slippage? So I had to go through to figure out what happened. Because I guess that was not necessarily slippage, that's just delay order. But even then, he can mess up the order book because now there are not going to be as many orders down there because people are, I think high frequency firms they try to deal with those situations differently. That's why sometimes if you look at this large cap, sometimes you see that the order book dries out, which is weird because they're supposed to fulfill these orders, but they're accounting for it in their strategies. But yeah, slippage is a thing in itself. I feel like I don't know because I've randomized my slippage to see what it looks like. And yeah, it looks pretty, but not as good as if there was no slippage. So that's why I'm curious on what you guys look like. Because yes, you say, okay, I get the good orders sometimes, but what about the times where you get the bad orders? Like if I randomize that, is that actually
Comes
constantly?
out like the hotkey where you just buy that, I don't know, buy the bid, and then it just so happens the bid popped up that 1 second before it drops.
Yeah.
Yeah.
I've
And you
had my
just get screwed.
fair
It
shares of,
happens. It does
yeah,
happen.
You
Yeah,
guys
yeah.
it's
use
definitely, but
stop orders?
that's
I
not
stop.
slippage.
No,
No.
it's technically not slippage. Yeah, it's just the volatile order book, and then
Yeah.
if the ladder's like this, and sometimes you punch it.
If I start to notice that that might be happening though, and that actually was happening a little bit on ICCT today, was the bid would pop up and then it would pop back down 10 cents. And if you had put your order to
And
buy the bid at the wrong timing, you get kind of screwed. So instead of doing that, I would just put my order out to buy where I wanted to.
Yeah, yeah.
you guys don't use any buy stop orders?
No. Buy stop orders like dips below gets you in.
No. That's buy limit orders. I'm saying buy stop orders. Triggers a market order when it breaks out.
Oh,
Oh no, definitely not. When it breaks out, no.
Like if
Yeah,
like
I've
I put
been
a price, like you
contemplating
could,
trying that.
huh?
I haven't done it yet, but I've been
Contemplate.
contemplating
Yeah,
to
you know
use
what? So the
that.
only so our breakout strategy, right? Our trending strategy does not work well if I use a limit order. Because when the price comes down, every like over a long period of trades, when the price comes down, it's already coming down. Like even if it just needs to touch it by 1 cent, it's already for some reason coming down. But when it keeps breaking out, and I think the reason for that is because you can't really time when stock is always going to come back down and to a price where you want to buy it. So I have to use buy stop orders for those for it to work really well.
mm,
So that's why I
Hmm,
was curious what you guys do because I
interesting.
mean it kind of makes sense though because you guys market order into your strategies, right? So into your trades. So market order is pretty much what I do with the buy stop orders. So you're just triggering it
Mhm.
manually versus having to put something up there just to like, okay, if it breaks 320, I just want you to get in no matter what. Like
So the thing for me is that's kind of the opposite of my strategy because especially in this market, we see too many false breakouts for me to feel like that makes sense for me.
Definitely.
So I'll buy the dip and I'll sell into that break. And if it holds that break, then I'll get back in.
Gotcha. Well, I guess another thing is that we do trade on a higher time frame. So maybe that's another reason, because you're in that quick dip and then just get it out. So you're the reason it keeps coming back down after you sell back.
Me personally,
it's really the market we're in. I totally agree with Danny. Like there's times where if it breaks out, I'll buy more often. That'll be turned into like my bread and butter, like the meat of my strategy. But right now, if there's a pop and I buy into it, more times than not, I'll be red right away and I close for a red trade. Like I need to be sizing before the breakout, usually right now.
Yeah.
Yeah.
It depends on the market, I think.
Depends
like
on the market.
2020, yeah, sure.
Yeah.
Because odds greatly are in favor of that pop holding and then going higher. But right now, it's just not the case. So,
yeah, I completely agree. I think, do you want to, Alex, do you want to go through to the simulation chart?
Yeah, well, I was actually just about to ask you if you want to pull up the screenshots you sent us.
Well, I can't.
That was really cool to see.
I don't know what I'm going to be sharing on my screen.
No worries. Okay, then I will open them. Just give me a second.
Yeah, because
that was really cool to see. And like I said earlier, a lot of the things that you share, the charts, the way that you phrase things with probabilities and percentages and all of that is how I've internalized my trading at this point, but haven't consciously like verbalized
it. No, I completely agree. You know, I think one of the reasons I went to algo stuff was also because I hate that I had ideas and I couldn't put it in, like I couldn't test it. I couldn't know what it would actually look like. Now I can literally test anything. Like it's not even it's just a question of, do I care to code the situation. Right. But the fun thing is I didn't have to code this. This was ChatGPT. I just asked it to do this.
ChatGPT is absolutely amazing.
That's super cool.
No, I tell you, I use it for everything.
How much stock do you put in the complete accuracy of this then?
Oh no, it's not. I could run the simulation. I've already run it on I already ran the test. I just wanted the idea. It said the idea, and then I ran it on my. Yeah. So I ran it with my strategy live.
Okay.
So my live strategy that's already. So I'll explain to you the foundings of that and what we're doing for the next month.
Yeah.
We're launching in the next, I think, 2 weeks probably, once I get the infrastructure created.
I'm interested to hear too, like after we talk about this, I'm interested to hear about like at what point do you start telling your algos to take bigger size as you're finding consistent results?
Exactly. So yeah, if you can go back to the images, we can go through some of the ideas for it. So if you look at, so this is the first, the 20K. So this was the first idea. I was just thinking, because I'm about to size up, or I'm about to size in because I just created a new strategy, right? And I wanted to look at the 20K version. And I was at first I was just thinking, what is it? Is it better for me to tell my strategy, hey, this is your new account balance, or should I just increase the risk on the strategy? The thing is, generally, when you increase the risk on a strategy, right, what happens is it actually distorts the strategy because it's using a new amount of the equity curve. Essentially, what it can do is it can make it more steep, right? And it makes it, that's the exponential sizing thing that especially exponential bet sizing that Lance Branson is talking about. When you bet more based on your account percentage wise, you actually increase the steepness of your equity curve, and you can see that from the down there. But my curiosity was like, when does that happen that I actually beat the account that I have? And so I just wanted to see a simulation of a 60% win rate trade, basic idea, and to see when will it actually catch up. And I was like, 400 trades in the first 20K, if you're using a 20K with just 1.5 and 30K with 1. And I was like,
it catches up pretty quickly.
Yeah, it catches up pretty quickly. And let me tell you, I tested this on one strategy. And I did this with, let's talk about the 2K first. So that 2K, I wanted to see, okay, what is it if 3% risk? I mean, 3% is not that much. It's like $60 per trade at that 2K level. And it goes like mad. So
It makes sense because like you're comparing 3% to 1.5%, which doesn't
yeah,
sound like much, but it's double the
it's
position.
double. But the thing is that you would not understand how exponential it increases comparative to the other account.
Well,
Like
the
I used
exponent is two, it's
is the
squared.
account. Yeah, is the square. Yeah, it's the square of the equity, right? It's the
Right.
square, yeah, of the equity. So the risk, sorry, the square of the risk. So and the idea was that I obviously we always have these thoughts, but we never put it on a chart. And I wanted to like see what it would look like on a chart. It's funny because I could have just done this on myself, but I was talking to ChatGPT one day and I was just like, okay, well, let's try some ideas.
You
That's
were
how
just
I do
hanging
it.
out talking with Chat GTP,
I
Yeah,
have
GPT.
I've
a
had many nights like that.
I have a talking thing. I have a talk to chat that I do. So I can literally
Oh,
just I talk. I literally just talk and it
The
writes
slippery
out all my,
slope.
oh, that's
yeah,
cool though.
yeah,
That's
yeah.
funny. That starts to get into some weird sci-fi stuff, but that's a
I know, but
topic.
it's because I can't type. I don't want to type. It's just like I'm
Have
having
you done the Turing test on it yet?
I don't care. I mean, it will probably pass. I'm pretty sure people will already. It's getting also if
Yeah.
you use it frequently enough, you notice it keeps getting better. It's
Yeah.
very yeah. But anyway, so if you look at the 2000, right, and the reason why I thought about this was also well, I thought about this before I found the grid, before I went back to the grid trading guide because I knew he said something about the account where he had $1,000 account that he was just growing, and what he does is that he said that whenever he reaches a certain amount of profit, he just takes out the money from it because he's already made his profit. He's using the profits from that to fund his bigger account, right? So he's using the profits from a more risky $1,000 that he doesn't care about to fund his bigger
Yeah.
400K account, right? And then I was starting to think about, okay, well, what if we use a $2,000 account, right? And we size it 3%. And yeah, there we go. At 400 trades, you're already halfway mark um, of the same amount of equity as the other one. And after 600 trades, so I
So
actually tested this on one of our strategies, and it's funny because I got so confused because I used 20,000 1% risk, and it got to 30K in 5 years, and then I used 2,000 3% risk, and it was at 30K too. I didn't know if I had put the wrong settings because it was the same. It was almost the same of values. But yeah, I looked at the chart. It's just a steeper chart. And guess what was so the first one had a 4% drawdown, and the 2K account had a 12% drawdown. Which I was like, I can manage a 12% drawdown on money that is all just profit. Like it's not money that, and
Yeah,
this is live.
12% is
right.
doable.
And this is on backtested data, but I tried it on live data too. It's essentially the same thing, same improvement. So what we can do now is we can take a $2,000 account, we can get it up to about 20 to 30K, right, in less than a year, and we can take the profits from that and just refeed our other account and bring the account back to 2000 so that it doesn't affect our overall equity. Because as you can see, at some point, the money overtakes how much money you have in your equity. And then what it happens is that now it's drawing down your entire quote unquote portfolio, your net worth. So at some point, you do have to stop it. You can't keep letting it go wild because it's going to affect your net worth. But I guess realistically, you only started with 2,000. Who cares if you're down 500K from the top if you're already up certain amount. But yeah,
So
that was pretty much it.
here's the difficulty with that though, is when you map this out using computer programs and all of that, it's very objective and you don't really have to worry about it in the individual trades that you're taking. But when you're a discretionary trader and you're not using algos and you're relying on just your own ability each trade, there's so much subjectivity that it makes it hard
Yeah, I don't
to
know if I could.
work on that sizing.
The reason why I did this in computers, I don't think a human should do this. So remember what I said. You are the equity curve. So if you're not trading the way you want to trade, your strategy might change automatically. And if your equity is now affecting how you trade, you are not the same trader I wanted to invest in initially. So I
Yeah,
need
the input
you.
values are always changing.
Yeah, I need
Yeah.
you to be I need you to stay the same
Yeah.
and just to your normal equity. But for
Good luck.
computer, for this, yeah.
Good luck with that. Like every day you wake up, the input variables are slightly different.
Yeah,
Yeah.
slightly different. But I need you to be relatively the same. I don't want you to be like, oh my God, we're down 20% on the entire account. What am I gonna do? No, I need you to think that this is normal. But like that's why I say I wouldn't use this, I wouldn't use a human. I think like the reason why I think of this, right? It's also I'm thinking like fund wise, right? Let's say fund. I wanted to start a fund, right? If someone came in with very like I'm doing a fund for like um small like people who don't have that much money, and I'll give them access to all of the strategy, right? With 2K, just 2K, but I will run and it runs like they don't care about the money, and it just runs on that. Once they reach a certain profitable point, like 14 to 10 to 20K, I will take like like 40 to 60% of that and leave them whatever else is left to actually trade for themselves. But the reason why I'll do that is because now I'm not risking my money, and it's just money that they don't even care about. Now I could do it with my money, but then I don't really have to do it as frequently. Like because the idea is that once after a certain amount of time, you always have to bring the account back down. Because if you let it go wild, it will start to affect your net worth.
Yeah, it seems like the bots at one point will pull off a mad ass money move,
Yeah,
just give it
exactly.
all back. So, but I mean that could happen to anybody. Um,
It's happening to someone. So but yeah,
yeah.
that was why. So next in the next couple of weeks, I'm working on it right now is that I'm actually using my own account, and what I'm doing is I'm just creating two simulations that I got. So like my normal strategies are going to be running with this much money. The $2,000 account is going to be running with this much money. When they trade on the same account, they're going to be taking the same amount. The risk is equivalent to what each one of them do, and so you will see the equity actually show up in my account with both of them combined. But I can also isolate them in the simulation to see how each one of them is doing. So I can keep track of the 30 to $60,000 account here, and I can keep track of the $2,000 account, or $1,000 to $2,000 account here. And if I want to, and we don't care about the money. It's $2,000. It's not going to affect anything. I've already made that and much. So once we double it up, the idea is that you start taking profits from it. So once we get to 4K, we'll start taking profits from it, but treat it like it's a 4K account. And at that point, it's just going to keep playing with that money. Like even if it draws down, like because remember, I'm providing the margin for it so that it can take it can take trades on all of these large caps, so it can trade Apple or whatever. Like it's just a smaller account, but remember, it's going to be moving differently underlying all of the combined equity. Like my normal one is going to be moving normally, and then that one is going to be doing a little bit erratic. When do I stop it? When I see that this one is affecting our portfolio too much. When the $2,000 account is affecting the portfolio too much, I'm just like, all right, need to take out the money, bring it back down. This is a really, really interesting way of growing a small account. Curious on your thoughts on it though, because there's definitely risk associated with it, but I kind of have been thinking it through, and I think it's actually worth at least attempting.
Yeah, definitely try it. I mean, Ross always does the small account challenges, so this would
Oh
be like
yeah,
an algo version
yeah.
of that. And
Yeah.
when he does the small account challenges, he uses a crap ton of leverage, so he can grow $500 into
Yeah.
$50,000 in like a
I
month.
think it was the
Very
five hundred
similar.
dollars to a million, right? That was the is
Yeah,
it $500 to a
That
million?
was yeah, that was his original like challenge.
yeah.
I
It,
remember on the first trade, he took a 250. He made $250 profit, and I think at that point he probably was risking about 150 to 200. That's like almost 20% of the account risk on the first trade. That's pretty crazy if you really think about it. But
yeah, it's
maybe that's what you need
pretty
to do.
ballsy, but he can do it with his level of expertise in the right market. Probably right now in the summer would be a little tricky because if you have those, three red trades in a row, you can almost blow the account.
Yeah. Just by kind
But
of luck of the draw.
yeah, it is totally luck of the draw, but it's definitely possible. So I think with an AI, it'd be kind of cool to, or not an AI, but basically an algo bot, would do like 3 or 4 different small account challenges and see how fast you can grow them, and
That
just
is true. And I was
put the
thinking
risk
of
at like 20 or some.
yeah, just at 20. And I was thinking of making this for content down the road because obviously I need to get back to making content at some point.
Yeah,
And I've never really known how to make content for trading in a good way. But I think this will be a good way where I don't have to actually take the trades and people will still tune in. to see how I change a $2,000 account to a $40,000 account. And
Yeah,
I'll
it'd be
just
super interesting. And
fun.
yeah, I'm actually looking forward to hear the follow-up on that one.
Yeah, I'm working on the code right now. I have to talk to my brother about some things, but it should be done by the beginning of next week. So we'll start running that. I'm also working on this new high frequency strategy. We added our eighth strategy, which improved our equity curve like by a lot. And on live data, tested on live data from the beginning of the year, it improved everything. So now it seems like we're just getting to the point slowly but surely where it's like essentially just a straighter equity curve. Um, but I am curious though, because Danny said that you're taking a bunch of your money out at the end of this year from your account. Are you just gonna are you gonna take more excessive risk with the money you leave after that, or
Um,
play it the
I'd
same?
like to. Yeah, I'd like to, but it depends on what we see in the market. Like mentally, it might be helpful to have done that and just to have that full understanding of like this is pure profit and I should be taking the risk with it. Um, it totally depends. It really just depends on like the quality of the moves that we're seeing, but I think
Yeah,
that that's helpful. Like, you have success over time, and I don't think it's going to be a massive change from what I'm doing right now at all. But it's just seeing success over time that gives you the confidence to take more
mm,
size as you see better, as you see a good quality setup that you think is good. And going back to like bet sizing is, last time I hit a move that looked like this, I was doing 3,000, 3,500 shares. Maybe this time I should do like 4,500, 5,000, 6,000 shares.
well,
Um,
yeah. I think it goes back to the idea that we talked about, and I don't know if it was the first time I was here, but that you need to at different goals or different points of your equity, you need to say when my percentage of risk per trade increases versus decreases. Like over a
right.
certain like you can have like right now you might use 2,000 shares to 8,000 shares. Well, when you go to saying, okay, I need to start using and whatever percentage of your equity that is, I don't know what range that would be, but you can start saying, okay, I need to start using 4,000 to 12,000 or whatever, because at that point you can now start to say, okay, I know for a fact that I've switched my mindset. I think it's very
Mhm.
easy as discretionary traders to just want to be as discretional as possible. But some objectivity of like, and you can just use your data. Actually, I could just pull up your data and say, okay, how much shares do you use on a regular basis per trade? And I can say, okay, Danny, I know this is how much you use right now. This is how much you used to use before. You see how you're betting more, even if your equity, like your equity was 40 grand, and you were risking about 20, you were risking about 5% per trade before. Why is it now that you're at 200 grand, you're risking only 1% of your trade? Did you make that decision, 1% of your equity? Did you make that decision actively because you were like, I'm fine with this much money? Or do you want to go back to that 3% and really keep the exponential bet sizing
Right.
as consistent as possible? Like kind of
Yeah.
doing,
there's definitely a ceiling at one point with these small caps, right? Like I think moving
Well,
over
that's, yeah.
$1 million will
yeah,
be
yeah. And I think that's another part of it is that do you just hit your ceiling where you can't even use your biggest size anymore?
Well,
Because
yeah,
Mouse has
that's
that, yeah.
part of it. I know that as I start to get into bigger positions, I'm going to have to somewhat adjust my strategy because I'm not going to be able to hit buy market for 8,000 shares and expect to get a decent fill. I'm going to have to hit buy market 3,000 or 4,000 shares twice and hope that it gets me in at the right spot. And it's probably going to
Yeah.
affect my hold time. I'm going to have to be just
uh,
uh observing and trying to be doing that on the best quality trades that I think, if I'm forced to be holding this longer because I have to take multiple orders on it, do I think that it has the potential to be
Right.
continuing to go up in 2 or 3 minutes rather than my time frame right now is very quick,
Mm-hmm.
where if I take just my one order, all I really have to be thinking about is the next 1 or 2 minutes. But as I'm taking 12,000 shares or something like that, the price range and volatility and volume is going to have to support being able to get out of that position for a
Yeah.
profit.
Yeah.
So
Like I deal with that too.
just
And I mean,
depends.
yeah, when we're gonna do, I mean, we're gonna start sizing up by the beginning of next year, like up to, I don't know what shares like risking. We're risking the same account because I'm increasing my account soon. Just
Well,
for
wait, hold up. We gotta wrap up soon here. So
oh okay.
that's a big second topic here, increasing the account size. But how about next pod? You could share us about if you get it. That'd be really cool. The increasing of the small accounts. Get some charts for that.
Yeah, yeah. I don't know what I don't know if it's not going to be live until next week, but
Oh
I
yeah. Well,
can
there's
show
no
you an
rush. No
example.
rush.
I can show you an example of what it looks like on the 2000 account on the live trade we've already taken. Like the live data we've already ran it through, and it should be around 200% increase. I'm assuming.
Yeah, it's definitely gonna be interesting to watch those different small account challenges in that algo space.
Mhm.
Is there anything you guys want to wrap up with or mention before we wrap up here?
The only thing for me is that August um, continues to be I'm only allowed to make money
On
on
Tuesday.
Tuesdays.
What day is it? Is this
It's
a podcast?
Tuesday.
Is it a
Well, hold on, look at this. So I'm only allowed to make money on Tuesdays, but I'm making a lot of money on Tuesday only. um,
Dang, there we go.
and I wore the right shirt for today. This is my favorite shirt.
Yeah,
Um, and that's it for me.
I love that shirt. I was looking at that shirt earlier and I was like, I know this one. I know it.
Yeah.
I
Anyways, yeah,
almost
that's it
stomped
for
it
me.
on it.
We'll see what happens on ICCT when it eventually resumes, what the news is and whatever happens. T1 halt isn't the end of the world. Sometimes you do see them resume decently, and then people think that T1 halt means bad. So
yeah.
you
Maybe
get
make a new
short
high.
stuck in it, and we'll see what happens. I don't know.
Yeah, we'll see. I was actually thinking today if I should take this week off, but I think I'm gonna stick around a little bit. But yeah, I think patience right now is key.
Yes.
Try not to dig yourself in a deep hole and then get green. I kind of dug myself in a hole today and then I kind of got
Me
back to
too.
break even, but it's like exhausting.
Unless
So
you're Toby. I mean, I've seen
yeah,
him dig himself out of some
Still
holes.
exhausting though.
dude,
Yeah,
Toby's
it's
the
not
champ
it's
at
not
that.
fun. It doesn't feel good still.
No, it is the worst. So right now it's just so easy to dig a hole. So I don't know, be patient as possible. Also, it's a 3-day weekend coming up. Monday, it's Labor Day. Markets are
Mm,
closed. Often I notice that the day leading up to a 3-day weekend is extra low momentum and volume.
might be.
So
Yeah.
Friday, be careful. You never know. It could be the most volume we've ever seen, but I do notice a trend. So I do tend to take those days off
Yeah.
myself because, people are like, oh, Labor Day weekend, we're flying to grandma, we're leaving on Friday, blah, blah, blah. I think you times that by all the traders in the world, even if it's just 10% of traders doing it, it just, you feel that in the market. So be mindful of that, I would say, going into
Yep.
the end of this week. And
Agreed.
yeah, and hopefully after Labor Day weekend, we finally get some like consistent big momentum again. And it's back to school and we'll see. End of summer.
Yeah,
That's
I
what
actually hope so too. I mean, August for us has just been as dry as probably with you guys. I mean, it's
tough.
just been a straight line, and hopefully after I'm hoping October or September is going to be like a big month.
Yeah.
Well, everybody is thinking that, and maybe it's going to be a self-fulfilling prophecy where everybody expects August to be slow. We have Labor Day. After that, you're in the fall, and you're going to have people coming back from vacation, people understanding that August is typically slow, but it starts to heat back up in September. So we'll see what happens.
Yeah. I'm
Yeah.
excited. I'm excited. All right, guys. Nice chat. A lot of new topics here or different take on topics we've had several times. So it was nice.
Yeah.
See you guys then next week. Good luck, everyone.
Sounds good. See you guys later.